So in yesterday's video, I gave you the Mark Minervini filter for stocks in India, but basically you can apply that filter to stocks in any market that you're trading around the world. But as you can see here, the Mark Minervini filter, if you apply it to India, it gives you 848 stocks. Now that's a very long list. If you are scanning stocks every single day, trying to find out what stocks to buy tomorrow, well, then 848 is too much of a list to scan. You cannot look at 848 stocks every day. So you need to filter this further. And that filter is called as an overlay screen. If you read Mark Minervini's book, first he will apply the basic filters, which is called as the trend template. Now, the trend template criteria you can read in both of his books. Okay, there are minor differences, so you can look at his latest book, Think and Trade Like a Champion, and you can take that trend template criteria because that is the latest that he has published in the book. Now that trend template criteria I have translated into specific criteria which we can apply here, which I will show you. See, the relative strength of the stock should be more than or equal to 70. The price should be within 25% of 52-week high. The price should be at least 25% above the 52-week low. The price should be above the 50-day simple moving average, and the price should be above the 200-day simple moving average. These are the filters that MarketSmith provides. And after we apply these filters, we get 848 stocks. Now, you have to go to 848 stocks to see whether the price is above the 50-day simple moving average, whether the 50-day simple moving average is above the 150-day simple moving average, and if the 150-day moving average is above the 200-day simple moving average. You have to manually check this because in these filters, there is no 150-day simple moving average, and 150-day is a key criteria in the trend template. Now, here is the problem. You have a basic screen here. On top of that, when you add more filters, this list will go down. That filter is called as an overlay screen because the fundamental criteria doesn't change. We are trying to reduce this list to a manageable level. Okay. Now, the next question is, what is manageable? Now, this could differ. If you are a beginner, you might want, let's say, 50 to 100 stocks. If you have 1 or 2 years of experience, you can scan stocks fast. You might want to look at 100 to 100. If you have been filtering stocks for a long period of time, if you have very good experience in the stock market, you could scan like 300, 400 stocks in less than 1 hour. Okay, because half of these are going to have red flags. A red flag is a flag given by MarketSmith to a stock if there is something fishy about the company. Okay, and there are multiple red flags. Even if the company has got one red flag, we reject the stock. Okay, so you have to decide what is the right number for you. I will suggest for you some screens here which you can use and customize based on your preference. Remember, the tighter the screen, the lesser will be the number of stocks here. And the looser the screen, the more will be the number of stocks here. So let me give you some screens. Number 1, I will not give you industry rank or buyer demand screen because there could be stocks which have a relative strength of 90 or more than 90. However, they don't come in the top industry groups. What does that mean? It means that that particular stock is leading the industry group. It is probably leading the market. Okay. So you don't want to miss out on leading stocks in the market. In that case, you cannot apply this filter. So that is why I am not giving you this filter. Okay. Earnings. Now, there could be some companies where the price is showing relative strength because of some other development other than earnings. So, for example, maybe the CEO of the company has changed. Maybe the company has launched a new product. Maybe the company has received some regulatory approval or something like that, because of which the price is going up. but the earnings are not yet on the table. That is why master score, earning strength, these are two things which I am not giving you because you might miss out on those stocks. Remember in yesterday's video, I told you if the criteria is too strict, okay, your universe of investable stocks will go down. But if the criteria is loose and wide, you will have a lot of stocks. So you have to strike an optimum balance where you don't miss out on the really key stocks that are available out there which deserve your time. Okay. So that is why I'm not giving you these screens. Let us keep this 70 or more. Okay. So here you will have to do some hard work. You will have to uh, go through the stocks manually, looking at their charts, looking at their moving averages, looking at their weekly charts, and trying to figure out what is happening with the company. Is the stock going up because of earnings, or is it going up because of some other development? And in what stage is the stock, in early stage, middle stage, or late stage in stage 2 uptrend? Okay. You have to manually go to the chart and check that. Now you can't manually look at 848 charts. So let me give you some screens based on price and volume. So the price should be more than or equal to 20. So we want to avoid penny stocks. So I save this. Average rupee volume, let us keep it 1 crore or more than 1 crore. 1 crore means 7 zeros after 1, which is 10 million. Okay. So more than 10 million rupees average traded volume every single day. So that will keep you only in liquid stocks. Okay. It will keep you away from illiquid or penny stocks. Average daily volume means number of shares traded. You could put this number as 100,000 shares traded minimum. Remember, Patrick Walker wants this number to be 200,000 shares traded. You can keep it 100,000 shares traded. Another important filter is daily price change. This should be greater than -5. Imagine a stock which falls 5%, more than 5% in a single day. Why would you have that stock on your watch list for your next day? It has crashed more than 5%. Let it recover and come to a proper buy point. It will automatically show up in these filters. Okay. But stocks which have fallen more than 5% in a single day, they should not be on your watch list or your radar for the next day. So I have added 1, 2, 3, 4 filters. So now let's see how many penny stocks get rejected. Remember when we started, we had 848 stocks with the Minervini filter. 848 out of 5,033 companies in the Indian stock market. So that's roughly less than 1/5 of the total. Now, from 848, let's see how many we get. So first I will save, then I will apply this. Let's see how many stocks we get here. 341. So more than half of the stocks are gone. So which means more than half of the stocks were either illiquid or penny stocks, low priced stocks, or volatile stocks, or stocks which have crashed more than 5% in a single day. So they don't deserve your attention. Doesn't matter what is their weekly, doesn't matter what is their daily time frame price action. If a stock has good technical and fundamentals, why is it falling more than 5%? That is a question you need to ask. And that is why I put that filter. Now, remember what I told you, the more strict your filter, the lesser will be the number of stocks in this list. So if you can manage to scan 341 stocks in a single day based on price and volume and prepare your radar or watch list for the next day, please use this filter. Okay, because within 1 hour or so, if you are expert enough to scan these stocks quickly, within 1 hour or 90 minutes, you can go through all of these stocks and come up with a list of 10 to 15 very high probability setups which have 6 points in the base, maybe 8 points in the base, okay, which I keep discussing on my YouTube channel. So those high probability setups you could find 10 or 15 of those or lesser than that in this particular, but you will have to spend that 1 hour to 90 minutes every day going through this list. It's a very hands-on, roll up your sleeves kind of approach, as Minervini writes in his book. Okay. However, if you are just beginning, okay, you don't have that much patience or you don't have that much skill to go through 350 stocks every day, then you can tighten up this filter. Go here, go to average daily volume, make this 200,000, which is in line with what Patrick Walker suggests. So let's save this, save the filter, and apply. Let's see how many stocks we get here. 272 stocks. Now, is this list manageable? I think so. You should spend time analyzing at least 200 to 250 stocks every single day. That will give you enough practice. Initially, it might be difficult to go through so many stocks, but have patience because half of these stocks are going to be red flags. Red flags means some manipulation going on into the stock, or a penny stock, or a low priced stock, illiquid stock. Maybe promoters have pledged the shares, maybe it is in surveillance list of regulators and exchanges, some reason, okay, because of which it has got a red flag given to the stock by market smith. So those stocks you can straight away reject. So almost more than 100 stocks you can reject just by looking at the red flag. So now you are left with only 100 to 150 stocks. Out of those 100 or 150 stocks, half of them will be in an uptrend. They will not be forming a base. Out of the remaining half, 70, 75 stocks, which are forming a base, more than half will be in late stage, like fourth base, fifth base, sixth base, because they have already had a good run up. So 75 comes down to 37. Out of those 37 stocks, almost half of those stocks will have a volatile base, although they have a base, but it's a volatile base. There is no tight price action. So from 37, you come down to 15. Okay. Out of those 15, half of them might not have the fundamentals, the earnings or growth or industry rank or whatever. So out of 15, you come down to 5 or 6, and then you scrutinize those 5 or 6 manually. The process that I just explained to you right now is exactly what is given in Mark Minervini's book. I personally follow this process, but when I read Mark Minervini's book, I realized how similar my process and Mark Minervini's process is to arrive at such a narrow list of stocks from a broad category. This is the exact process described in Mark Minervini's book. My style is a bit different. I don't know how Mark Minervini is doing, but in general, in principle, the process is the same. You keep filtering till you get a list of 10 or less than 10 stocks, which are the best in terms of technicals, in terms of fundamentals, everything. Okay. In terms of chart, in terms of base formation, near the 52-week high, good volume, liquid stock, all of those criteria can come together. And this we have to do every single day. This is called rolling up your sleeves kind of work. You have to put in the hard work to arrive at those stocks. And once you select those stocks for the next day, you have to be absolutely sure at what price you are going to buy the stock, how many shares you are going to buy the stock, position sizing, and when you buy the stock, where are you going to keep your stop loss? And if the stock shoots up in a very small amount of, very small period of time, like in 15 minutes, if it shoots up 10%, how are you going to handle that situation? You cannot buy a stock 10% above the buy point. So are you going to buy that stock if it is extended 10% above your buy point, or are you going to let it go? Okay. And if you end up getting a price which is 3-4% above your buy point, then what happens to your stop loss? Those are all questions which have got nothing to do with stock selection. It has got everything to do with trade execution. And once the trade is executed properly, then you go into the third category of skill, which is trade management. The stock will pull back in most likelihood. Okay. If it doesn't pull back, great. That's the icing on the cake. However, if it does pull back, then you need to have a plan as to how you are going to handle that pullback, how far are you going to allow the stock to come down before you decide to sell the stock? Okay. And what should keep you in a stock during a pullback? Are the fundamentals of the stock so compelling that you are not willing to sell the stock till it hits your 8% stop loss or 7% stop loss? So those are the questions that you need to answer. So if you see in this video, I have described to you and I have shown you the exact process that you should be following to become a truly professional stock trader. Okay, stock trading is not gambling. It is a science partly, and it is an art. Okay, this is what we have discussed today is the science part. The art is something that will come with experience. Art consists of risk management and position sizing and trade management. So I hope this video was helpful to you. Go to Minervini. You can play around with these filters. If you make this 10 crore instead of 1 crore, the list will reduce further. If you make this 50 instead of 20, the list will reduce further. If you make this 500,000 instead of 200,000, the list will reduce further. Choice is up to you. You decide what to do. Okay. Thank you so much for your time. Please don't forget to like, comment, and share this video if you found this valuable, so that once you do that, this video will reach other people who want to become professional stock traders just like you. Thank you so much. Hope this video was helpful.